Hi, this is Randy Finney with the Right Side of the Chart. This is a closing market wrap for the week ending Friday, June 10th, 2022. Markets are now closed. What I'll do is start out with the equity markets. I haven't touched on gold and silver in a while, so I might as well just throw those in there. I've already done a comprehensive video on, and as well as static posts with some charts for you on crude oil and natural gas, so no reason to revisit those. Let's maybe Bitcoin if there's time, and that's about it. And I'll talk on treasuries, but let me just start with treasuries now. I haven't re-engaged. I told you a couple of weeks ago. I closed out those positions. Looking, there was a little bounce. We traded it. They're really not going anywhere, and I don't see a lot when I look at the chart. So, they're probably going to. Here's the thing, market's either going to crap out next week or not. It's going to either crap out or rally. I don't think we're going to consolidate anymore because we did a bunch of that already, and we have the FOMC meeting, the announcement on Wednesday at 2 p.m. So, market's either going to like what the Fed's selling or not like it. So let's not try to really read too much into what happens before then. Sometimes a market will throw a hissy fit in front of a Fed meeting when the Fed indicates they're going to raise. That happened in 2018, fourth quarter. We threw a hissy fit today, but one day does not make a trend. So here's a big picture on the equity market. SPY. Nothing different from what I did this morning. We're off the lows. We've had the 3 weeks. Now we were going up for 3 weeks, and now this was a down week. So that's certainly notable, but we're still above the recent lows. And a lot of times, if you're going to have a decent rally that could be, still maintained, there's still the potential for a multi-week, even multi-month rally. And there is every bit as much a potential that the bear market rally is over, that we rallied up into those levels I gave you earlier today. So anyways, the market had a chance to recover. QQQ had a chance to recover 294 and didn't do it. So for that, if you're going to give a check mark to the bulls or bears today, bears get it all day long on just what happened today. But this is the S&P 500. Before I move off the weekly charts, show you QQQ. Really the same story on the Qs. We are still off the lows by I don't want to use the word comfortable margin because it's not that much. It is still about almost 3% above the recent lows. And we're also above the trend line. We had almost a back test. That was the same trend line I showed you on the 60-minute chart. So kind of a to be continued scenario. I closed out most of the relatively small long position I had on the indexes today, or when the Qs had it made it up, when it became very apparent after a couple hours of trading that we were not going to regain the 294 level, and nor did we. So that's it on the weekly chart. Nothing else really to say there, other than I'm going to show you some stuff on the 60-minute charts that's a little more interesting. But first, we're going to walk it down here to the daily chart. There's that range, a recent trading range. We did break down yesterday, had a chance to recover today and hold support, but it didn't. It gapped down, took out 294, and so there it is. So I'm going to give you both sides of it. This is the breakout, the downtrend line, the big on the daily chart of QQQ, the bullish falling wedge. There was a breakout, and what is close to almost a back test today, and if it gapped down on Monday, it would be a perfect back test. Give or take, you can play around with these trend lines. You can put it like that. Let's do that. Let's move it down there. I like that. It captures these, the first two candles up here, the top of those candles in early April. Top of these two candles, the top of this one at least, and that one next to it close, and then it also catches that one. So we gap down on Monday, be about a 1. Well, remember Monday's over here. You got to shift forward a day, and then that would be almost a 2% more downside. But that would be a test of these recent lows right here as well. So here's the takeaway, guys. Today was absolutely bearish all over the place. Everything that happened on the equity markets for one day, but again, one day it didn't change anything on the weekly yet. So whereas normally I might say, oh, I'm going to go home short. No, I'd rather just see what plays out next week. And like I said, take home a very, a small enough long position that if we gap down 4%, 5%, it's not going to kill me or cause a lot of pain. So that's it. So we'll see what happens, and if we gap down there, and I can see that level stabilizing, might even add to it, or I might flip around reverse short because if we take out these lows, we take out the trend line, you're going to get the bearish PPO crossover there on the Qs, and that could be open the door for my next target. Now remember, my next target, we already came halfway down there to T3. It's not much below where we are, and there's big support. So the risk reward is it's just not great anymore, and you can kind of probably hear it in my voice. I'm just not excited, or I don't see the point of going aggressive long or short right now, especially going into the weekend, and especially with the FOMC meeting next week. So if the market wants to throw a temper tantrum leading up to or even after the Fed, sure, it can drop, but you've got pretty darn good support. My third target starting to come in at about 268 or so, which is only 7% below current levels, and then the trend line a little below that if it wants to overshoot it. Could be 10, 11% if it gets there. And that's also, yeah, like I said, T3, which is this, and or the trend line there in close proximity there. And there's no guarantee that's where it has to stop if you want to look at it this way. You can take off all the lines and say, well, maybe this is a big a flagpole, an impulsive move down in a weekly bear flag, and then measure it out, and that could take us down. If things really crater and we get all that forced margin call selling, everything I was warning about is a potential back here. Again, I don't think it's going to happen now, but hey, if it does, jump in, or if you're short, stay short. I just don't go heavy into anything if I don't feel that the risk reward, if I think it's kind of crapshoot whether it can go up or down. Made some really nice profits up until these recent lows here, and then gaming that bounce, and pretty much, as I stated, closing out the majority of my short positions right there. That in the that day and in that after-hour session on that whatever that date was I covered earlier, the 22nd or the 2nd of May. I'm sorry, the 2nd of June. Okay, so here's what I wanted to show you as I get down to the 60-minute charts. So here's what happened today. I'm going to zoom in here. Again, big picture, the downtrend line right here, which still may come into play. That's the same one I just showed you on the daily chart. And so a gap down would hit that back test and also come in. We have all these lows right here, big levels where the buyer stepped in before, and they could step in again, and that could give us that final move up to T3 or even my potential fifth target. So to quantify it for you, try to measure out to quantify risk and reward, that's about 14% if that potential T5. I never made it current because we never are official. It was only potential. I left T4 as the final target, and that still hasn't been hit. Came close, especially in the I think in the after hours we built on that, but because we never broke out of this range, you could see which way this went. But let me show you something here. So this morning I showed you when you turn on the pre-market session trades, you had at this point right here, you had a bear flag continuation pattern, right? You also had that on the futures, and it broke out. Again, you're not seeing it now because I don't have my after-hour trades turned on. And then that played out. That was about, if you take from this point right here, I'm going to do it again. Let's see. This point here down to where that flag was there, that played out to about the measured target, roughly, right? Right around there. Now, what I have here, sometimes you have to look at, they dismiss the after-hour trades and look at the regular session trades. So I'm going to turn all these lines off. Let's turn that post-market little white candle off. Hold on one second. Let me do that. Okay, this shows regular session trades. So now you have another potential bear flag. I'm going to talk on this for a second. Spend a little bit of time. So there's your flagpole, much larger, right? And now, of course, you have this on, and that is proportional to the length of that flagpole. That's about what you want to see, proportionally again to the move down, and that would lead for a much bigger drop. In fact, I measured it out for you right here. I took that move down, and I'm just assuming this right here, the top of the candle from the 60-minute chart. That's June 9th, the 11 a.m. 11 a.m. candlestick. Excuse me. And nope, there it is. That one right there. Yeah, same one. So I put it at the top, measure down to the bottom of the pattern right there, and then you just take that line, or you can do a duplicate, add it to the highest point of the flag, and that gives your measured target. So I'm going to have to squeeze this up here, and that would be about 270, 283. We'll call it 273. So that's certainly a potential. I'll tell you why it probably won't happen in that fashion. Remember, when I say won't happen, it won't happen in that fashion. Sooner or later, we're going to get there. It's a matter of, is it going to be sooner, as in early next week? Because a bear flag, the nature of that is the move down. If the pattern plays out as expected, the move is equally as impulsive on the way down as it was leading up to the continuation, the consolidation period, the formation of the flag. So what did I tell you? 273 we're going to call it, and we go to the weekly chart, and you got put us a little above my 268.30 level right there. So it could, in one fell swoop, gap down, take us down there on Monday. Why I don't think it will is, again, this is just going from experience. So I showed you this morning the flag on the NASDAQ 100. Well, here's the futures. This is a 60-minute chart. I'm going to zoom in before I take it in a little tighter so you can see better in the video. There's that same downtrend line. So keep that in mind, the primary downtrend line right now. We're going to zoom in nice and tight. Remember, we ran up and hit what was really a minimum retracement level, T3. The third target zone was right there, and that was also the 38.2 Fibonacci retracement level, put in a divergent high right here, and then had that consolidation, and boom, broke below it. So here's what I wanted to focus on. We had, again, last night, in the futures, and that was also what I showed you on QQQ, we had that flagging action there. Flag was a bit long, but that's because the futures kind of go into, they went into their little holding pattern. There's hardly any volume overnight, and then they picked it up in the morning, and that's when QQQ. So QQQ was trading here in the after-hour session, the first part of the flag, and then in the second part. And the flag on QQQ was more, the flag itself was more in line with the length of the flagpole. But that one did play out. So when you broke above it this morning, below it, that's how I had it drawn initially, and you broke down below it, you had an impulsive move down. I.e., that's it. The flagpole, boom, break down, and it was roughly proportional, equal to the, and you can see in scope as well as intensity, how far it went and how, impulsive it went down. So now you could say, okay, do we have another flag? Here's the thing. I can recall a very, very few instances where I remember back-to-back double flags. It has happened. I have seen those. I can tell you they're pretty rare. By the time you set up the second flag in a continuation like this, even if you get a little breakdown, it usually proves to be a whipsaw, and that's usually it. Okay, that's from my experience. Now, I don't have on the 60-minute chart, I don't have bullish positive divergence, so I can't make a strong case to go long. But there was also support that we parked on today. I had this level here for a while. I know you probably can't see it in the video. That's 11,858, and it was, resistance back here. And remember, when you get down much lower, you start hitting the recent lows. These were the big major lows right there. Was that boom, boom, boom? We were pounding out a bottom there, and so you have pretty good support. It's not super well defined because you have a lower low here and then a higher one. You have two levels on that yellow line, which is 11,702. So that would also mesh with if we get a scenario of maybe a gap down in the morning to make a full or an actual back test. We didn't quite get to the trend line to back test, so that's about 1.25%. There's also price support there. And so watch for that. Now look, if they take that out, and they take out these lows, you take out the back test of the trend line, yeah, maybe we do maybe that flag does play out and you get those double back-to-back bear flags, bear flag 1, bear flag 2. Possible. Again, just not very likely. And now if they do hold it up, whether they gap down or not, or they gap up or open flat and we move up, remember, if they do that and the market starts to rally, well, it's now, still holding above and made a near test of the recent lows, or maybe it wants to go for a full test. So what I'm trying to say, anything in here is simply a test of the lows, and you got to be careful there, being short or long. If you go long, it's okay because then you have a stop somewhat below. If you go short, Well, the level to watch right now is the same one before. Remember, 12,085 is comparable to my 294 level on QQQ. It was the same level. It was a big, 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 big level to me. And you got the breakout. Then you had that beautiful bull flag continuation pattern. And then that popped. If you missed that breakout, you had another chance there. And it was a nice run up. And then that's again when the easy money was made right here at that initial run. Then we just consolidated and broke down. So that's it. These are the levels to watch. And too close to coin toss odds for me. So showed you levels to watch. Trade it as you like. Let's talk on other things now, where there's maybe some better fish to fry. Well, I've already covered the energy sector. Let me do an update on Bitcoin for you. Bitcoin's just kind of grinding around in that range. Remember, we had this range right here. We had support or resistance around 307 right there. And then support down at the bottom where this box is at 28,575. That range, we popped above it, but we couldn't hold it. In the bottom of it again is support, and we're also flirting with long-term support. 28,575. You can see how many times Bitcoin. These are Bitcoin futures, BRR, but they do a good job of tracking Bitcoin. It's hit it a lot. But we're not going anywhere. We had some positive divergence back there. They had room to run. Maybe that support will hold, but maybe it's going to break down. So I don't know. I don't have. I lightened up. I still have some from I took back here and allowed for the back test, which was successful. But this thing so far has been a failure to launch. And however, like QQQ up until yesterday when it broke down, it is in a similar consolidation period and it's building that energy. So you're likely to see either a powerful breakout if it can break above the range. And remember, we still have that downtrend line as well. So you'd have a double breakout or a break above both those levels. Give it the benefit of the doubt. Wait until both are taken out. Or a downside break. And let me show you what Bitcoin looks like on a longer term perspective. Okay, this is Bitcoin, Bitcoin in US dollars here. This is on stockcharts.com. Remember, this is that long-term support, big support level I believe that we've fallen to. So I'll maintain that from a longer-term perspective. It is still objective to step in and buy this pullback to support. So far, it's just kind of, we hit that level and we're just holding on to it. Bitcoin is, it's clinging to that level, 29,151-ish. And you had, again, once you broke it here, you had two weekly, this is a weekly chart, by the way, weekly candles, two back tests. Then we back tested it for a while there. We set up, we had a downtrend line, and boom, it held and it ran up. And then it put in a big divergent high, and that was a top. That's when we got short Bitcoin. It's coming down, it's falling back down to that level. So there it is. And that's it. The indicators aren't telling me a whole lot. I wish I could make a better case on the weekly chart. Again, on this weekly chart, we're at to step in and buy. Let's clean that up. And what would that look like? Well, one of many things. Let's just say, for example, we had more deeper overbought. We haven't even hit the 30 level on the RSI, or we had a wedge with some bullish divergences and all that, and we don't. You can see no divergences. Let me show you what it looks like on the daily chart. It's same thing here. So we're just zooming in a little tighter now using daily candles. Again, you have that's that same trading range I just showed you on the futures right here. The futures, we were looking at a 60-minute chart. This is a daily chart. There's that same long-term key support on the weekly chart. There's a downtrend line that needs to be taken out right there. And we were oversold there. And you had a bounce off that one. We were oversold there, and you had a bounce, but it didn't go very far. These are in a bear market. Remember, you oversold and then you continue lower. You get a little bounce. So that's it. So again, if you're in it, it's fine to be in it. But if it takes out the recent lows because they're very well defined, you may consider a hard stop or staggered stops to allow for maybe one more brief whipsaw down below there, if that's your thing. And Bitcoin, I suspect if the market can rally, if whatever happens next week, pre and post Fed, If the market can hold and defend the lows, even if it's a brief undercut below followed by a recovery, and we can get a good rally going in the stock market, then there's a good chance we'll return back to risk on. People will be buying tech stocks. Tech stocks will likely lead, and they'll buy crap stocks and crap investments like Bitcoin. I'm sorry if you're a Bitcoin fan, but to me, there's no fundamental value. It's only is worth what the person next to you or behind you is willing to pay for it if you turn around and sell it. There's no earnings. There's no, tangible assets, property, buildings, intangible or tangible assets. That just doesn't exist with Bitcoin. So there it is. What's next? Let me show you GBTC, Bitcoin Trust. We had that downtrend line that I showed you, and we backtested, and again we backtested today. And there's a recent low. So ideally, it should hold those levels. You almost had divergence. You had a slightly lower low on the PPO, but you did have a higher low on the RSI. So you do have bullish divergence there, at least on the RSI. So again, I can't get too excited about it, but you can buy it here on support or stay long with a stop somewhat below or staggered stops to scale out. So that's Bitcoin. There's not a lot I'm getting excited about. I'd like to see a little more downside in the crude oil and natural gas. Some of the next support levels broken, but that's about as excited as any sector trade I'm getting right now. That's only one that appears to have a pretty favorable risk reward, even though there's a little bit of work to be done. Oh yeah, finally, okay, let's wrap it up with gold and silver, and then I'll let you guys get on to your weekend. GLD, this is a daily chart, but let's look at the bigger picture because that's really what I'm trading off of, or talking about the trend trade, the long-term trend or investment trade in gold. This is, I'm just changing my tool colors here. You have this is our bull market in gold. We bottomed back here all the way in December of 2015. Set up the time, 130 was a huge level to me. That was comparable to my 294 level, but on a bigger scale on QQQ recently, where I figured it was the same kind of thing. We had that basing consolidation pattern going on, and then when you popped it, that's where I said that would be very bullish for gold, and we did, and that gave us the strongest leg up in the bull market. At which point I said, I'm closing all my long-term positions, short and long-term swing in trend, because of the fact that was the previous high from the last bear market right there, all the way back in last bull market, I should say, in 2011, the beginning of the last bear market. And so we hit it, and then we hit it again recently. So, but in a more near-term analysis, I said, here's what I was watching. Even before we broke out, I was watching this triangle. Said a breakout would be bullish. We got that, ran up. But then when you check that previous high, that stopped it. You also had some divergence there. Pretty big divergence, that is. Came down, and then I was saying, look, we could back test this triangle, and that would be an objective entry. And we did, and we back tested the apex. As we got around here, that's where I said, we'd probably be coming in, meaning you back tested not one, but multiple trend lines. You back tested the downtrend line, which is the top of the triangle, and the uptrend line of that symmetrical triangle pattern. So you zoom in real tight. Nothing big so far. Gold's kind of slow. It's playing out slowly, but it's working. So far it's keeping us in the trade, keeping that case, the longer term bullish case alive, saying that this was a breakout of the triangle here, followed by a back test, and then we could continue on. But what we need to do, see, this level's been here a while, 173.87. It's resistance. It was resistance before. I have quite a few candles there. And so we're almost there. We need to pop that. I like the PPO, the posture of it. It's above the zero line, and it's curling up above the zero line. That's a trend indicator. When you break above the zero line, you're in a bullish trend. If you can hold above there, and the fact that it's starting to curl up is constructive. Let me use that word. Here you go on a 60-minute chart. Gold had a pretty good day. And this is a decent level, near-term level. Again, we're down on a 60-minute time frame, but just like on the weekly I showed you, we have these recent highs. It's been tapping on that level. That's 18. We'll call it 1880 really to round it up a little bit, about 1878, 1880 if you want to be safe. And you can see that's this recent trading range here. So that's what we're doing, just like QQQ and SPY had these recent trading ranges on the 60-minute charts. We know which way they broke. They broke that way yesterday, and then they followed through today. Now this if gold can do that, that should be quite bullish and take us up to that next target there at about 1904 and possibly beyond. So first things first, we need to break it. I'm going to give you one other resistance level slash target while we're here. I'm going to move that to right about there, give or take. And that comes in with this reaction high, and then there was a support shelf there with two brief violations. This is the nature of this market, and that's why I was a bit not dismissive, but thought that yesterday when we broke the trading ranges on SPY and QQQ, we could snap back up, because this market's if I had to give it a term, I'd say algo's gone wild. You know, algos, the computerized trading programs that shift through and figure out and run stops and pull these little shenanigans, and so you almost have to get used to it. Just like right here, you had a pretty good support level about 1842. Twice they've taken out and run the stops, and they run the stops, they turn around and then go long. They buy those shares from the traders that are getting stopped out, and they swing it up there. At least that's how I would do the pro. Whether it's humans or machines, all you have to do is have enough money, and they do. Oh yeah, the biggest firms in the world, they've got both humans running their trading desks, as well as to a large extent algos doing the buying, deciding what to buy, when to buy, and when to sell it. So that's it. But you can't argue that range. So if we can pop it, great. Otherwise, we're at the top of the range and get rejected. And what I liked about gold here, divergent low here on the 60-minute chart just got put in place. So if that divergence plays out, we could have a higher additional upside there in gold. So look for a breakout next week or whenever it comes. And then last but not least, and silver will follow. I'm just going to save some time here. This video is running pretty long. Remember the euro, I highlighted recently, euro US dollar came to this major long-term support zone that's fallen to pretty much throughout its history since the euro came to existence, and that's a level where it's found support in the past. So we'll see if that happens again. It was oversold just like it was back here when it bounced, just like it was right here when it bounced, and just well, this time we had positive. This place we had positive divergence, almost oversold. I'd love to see a divergent low. We don't have that, but again, for a bounce trade, all we need is a bounce that could last weeks. This is a weekly chart, and that would be bullish for gold, and that would get us up to that target where this is where I'd look for a reaction here. The downtrend line and that 108.523 level right there. And remember, we're down here back on the top of the support zone. That'd be a good bounce. Now take it down a little shorter term, and you can see on the daily chart, you had a bullish falling wedge. Your divergence was here on the RSI. We've been building divergence, and right here on the PPO right there. So there's our wedge. You can draw it like that or like that. We had a breakout. This was support right here. Was support right there. We had a little whipsaw move down below that support level, and now we're back to it. So if things go the way the charts indicate, and especially with this PPO getting up here, we could bounce tomorrow. And then the level to watch, if we do bounce, you need to take out now. This has become very good resistance, 107.731 with support here, the reaction there. That would take us up to that same downtrend I'm talking about. So if this happens, which is my preferred scenario, now it may happen, I'm not sure why that popped up. It could happen with more downside. In other words, there's a lot of possibilities, but there's that downtrend line. Maybe we come in and we want to back test it and then go there. And that would also give us a double test to those, a test to the recent lows. And remember, I'm covering this because that rising euro equates to a falling dollar, and that is typically provides a tailwind, or aka bullish, for gold and silver. So those are the things to watch next week. Still remain long and bullish gold, silver, a little less long and a little less bullish, but still there with the equity markets. for now. That can change on Monday. We'll see. And Bitcoin, like I said, I've reduced. I have a nominal position. Energy stocks have a decent position, but still it's not an all-in moment there yet. Hopefully will be soon, and if it's not, whenever that time comes, whether it's 2 days or 2 months from now, excuse me, 2 days or 2 months from now, then we'll make sure we try to catch that one. All right, let's wrap it up here. I think I covered everything I wanted to, so we'll pick it up on Monday. Have a great weekend, guys.